So as we all know, interest rates are rising, but also Hong Kong's economy is slumping. So higher interest rates are coming at the least convenient time for Hong Kong's economy. What can Hong Kong's borrowers and households expect in the future?
Now, Hong Kong operates the linked exchange rate system. So our monetary policy objective is to maintain exchange rate stability. And because we operate the link, Hong Kong dollar interest rates has to follow US dollar interest rates. So as US continues to raise rates, what we should be expecting is that Hong Kong's interest rates will follow. If you look at the interest rate hike for this cycle so far in the US, they have already raised 3 percentage points. And for Hong Kong, if you look at the interbank interest rates for 1 month, for example, from almost zero in the beginning of the year, is now 2.6% already. And if the US were to further raise rates as the market is expecting in the next 2 months by, let's say, 125 basis points, the interest rate differential between US and Hong Kong will further widen. And that will incentivize more carry trade, meaning that they will sell Hong Kong dollar and buy US dollar, so that Hong Kong dollar exchange rate will again hit 7.85, the weak side of convertibility undertaking. And then we will see the aggregate balance of Hong Kong's banking system come down further, thereby pushing Hong Kong's interest rates further up. So what we all should expect is that Hong Kong's interest rate path will be going up in the near future. And for the public, especially for people who wants to make investments, who wants to think about taking out mortgage or making borrowing decisions, they need to be fully aware and take into account all these risks, especially interest rate risks.
Do you worry about the bad debt will increase in Hong Kong?
Well, as the economy is slowing, in fact, the global economy is slowing, there will be pressure on the classified loan amount, not just in Hong Kong, but around the world. In the case of Hong Kong, we're also watching that very carefully. But so far, the risks are manageable because banks in Hong Kong are very prudent in extending their credit. If you look at the current classified loan ratio for Hong Kong banks, it's gone up slightly from 0.98% in the beginning of the year to 1.1% at the end of June. It's gone up slightly, and there may be more room to go up because of the slowing economy. But we think that is still manageable. And it's actually quite low when you compare that with the same ratio in other financial centers, or compare that with our own historical level. It remains quite low. In fact, if you look at the loan book of Hong Kong's banks, a good part of it is actually mortgage loans. And mortgage loans in Hong Kong is very, very safe. So far, the default ratio is only 0.05%. Because as you know, we've got many rounds of macroprudential measures so that the loan-to-value ratio of Hong Kong's mortgage is actually quite low. And the debt servicing ratio is actually quite high to make sure that even in a cyclical downturn, borrowers can still pay their loans. So I think the credit risk in Hong Kong is something that we watch, but we still think that it's quite manageable.
Are there any policy tools available to the HKMA or to the government if monetary policy is tied to Fed because of the exchange rate?
Well, because the monetary policy is not to be used for purposes other than exchange rate stability, that means if the government needs to provide some support to the economy or some support to individual sectors of the economy, like the SMEs, then they will have to use fiscal policy, either in terms of investing in infrastructure, or like what the Hong Kong government did in the last 2 years, giving out consumption vouchers. But I think the support to the SMEs are important, especially at this time when the economy is only starting to recover and when interest rates are starting to go up. And that is one reason why for the HKMA, together with the banks, we have just announced that we will extend the pre-approved loan payment holiday scheme by another 3 months. And the government, likewise, they have extended the SME financing guarantee scheme, so as to make sure that at this difficult time, there will continue to be some support for the SMEs to get through this tough time, hoping that the economy will come back and they will get through this challenging period.